It's a publicly chartered corporation.
Their government, it's controlled by the government.
Yeah.
Sure, it is, but they're on the side, but they're on the side of the government and the banks. They're not on the side of us.
So the central bankers, they know, Bernanke knows at any time that his the Fed's private administration special privilege can be revoked, right?
Sure.
And he knows,
But to do that, any president that does that is going to have to deal with the recession that comes. And I don't know of any president that will do it, other than perhaps Ron Paul would have done it. Yeah. And even that's a question. I mean, who is going to actually send us into that kind of a depression?
Calvin Coolidge.
But here's the thing. Every debt is eventually paid, either by the lender or the lendee. But all debts eventually get paid. Yep.
I would submit that in case of a government, you can just maintain a steady level of debt as long as your government
As
exists.
long as somebody will continue to buy your bonds, you're correct.
right, so buys your bonds, right?
That's the question. Is at what point, and in the meantime, remember that exponential curve? It just gets higher and higher and higher. It doesn't taper off.
Yeah,
It can't-
my hypothetical is
Yeah.
not an exponential curve.
Yeah.
You could maintain a federal debt level at 50% of GDP or something like that,
Sure.
and keep
Right.
a fairly
As a
nominal
percentage of
rate.
GDP.
Yeah, percentage of
Yeah, but
GDP.
we're going
But
up.
have you, okay, so
We are currently going up.
theoretically
Yet we're maintaining.
theoretically that is possible. But in the last 40 years, I don't know if I have I have it in another presentation, I might be able to pull it up. GDP has grown at the national debt has grown at the same rate of GDP. In the 1970s, we got a 1-for-1 return. Every dollar of debt we took out, we got a dollar of GDP growth. From the 80s to the 90s, it was 50%. Every dollar of debt we took out, we got a 50% return. Now it's down to 20%. The trend is not our friend. It's not going in our direction. So the thought that we can now all of a sudden grow GDP at a rate faster than debt, when we've never done it in history, I find to be a little bit impossible.
Then the other thing that's happening is the whole flight to safety.
Sure.
People are buying government U.S. bonds, not because they think it's a good investment, because
But it's
everything
the-
else sucks, right?
Absolutely,
Right.
absolutely.
Right.
And so we're in this temporary period where the politicians and the treasury guys say, oh, look,
Yep.
it's 2% 10-year loan.
Right.
Always says that.
Right.
You
Look how
know,
low interest rates are.
I mean, here to me, this kind of sums it up right here. This blue line here is our federal tax revenue. It's about $2.5 trillion. The red line next to it is our federal budget, which is about $3.5 trillion. This line over here is our national debt. So not only is our national debt 15, 16 trillion, it's growing by at least $1 trillion every year. But this over here is the U.S. unfunded liabilities. This is where I say, or I ask you, do you believe in math, or do you believe in math or magic? Because it's one or the other. If you believe in math, this cannot be paid off. Now, if you're willing to suspend the laws of mathematics, then we probably have no problem. But if you believe in math, this cannot be paid off in conventional means. It cannot happen.
and you had said earlier that they're contractually obligated to pay for Medicare.
You can change the contract,
Right,
of
they're
course.
just going to say, they're just not going to.
But I'm just, right. But what I'm saying is, then somebody loses, right?
Right.
So the only way out of it, from a mathematical perspective, is very high inflation and financial repression. Some combination of the two.
Well, but there's a lot of societal things that we see happening in Greece. You know, all these people who are counting on Social Security.
There's a third way. They can confiscate assets. But that in
No, I'm
itself,
saying the people in the street are going to be a hey, you told me you're going to give me Social Security, now you're not. They're going to be a little.
or you can still get the Social Security, but it doesn't buy as much. You know, maybe you still get your contractually obligated payments, but now rather than paying for the rent, it pays for bread.
Right, so I would submit that the government, they're not that bright. They're smart enough to know that there's going to be a revolution if they don't send out the checks. They're just going to print more money. And people are not smart enough to know, oh, I still get the numbers the same on the check.
Exactly. So that's where I say the repression and inflation is coming. Now, it hasn't happened so far. It's been very low, and we can talk about that, and perhaps that plays into why gold went down over the last couple of weeks. But inflation, here's the thing, the system is designed to be inflationary. It has to grow. If it doesn't grow, it crashes. So they might be able to slow down the speed and for a year or two not print as much, but unless they want to redesign the whole system, they have to print.
Don't we need inflation?
Why?
As your markets grow, if you have your overall monetary system the same, you eventually go into deflation over long term. There's no incentive for. Look, has anyone heard of Bitcoin?
Yeah.
Oh, yeah.
So the problem with Bitcoin is that after like I think I forgot what the time scale is, but it stops at a certain point. They
Yeah,
stop printing.
it's like 20 trillion
They
Bitcoin.
stop minting more coins. So if I am someone who invests today in a, say if we're in a Bitcoin economy, and I go and get $1 million loan to start a company. So I get that loan today. The value of money is going to be decreasing over time, because as more people are joining the market, there's going to be more demand for the currency, meaning that one Bitcoin is going to buy a lot more than it used to. So,
So why is that a bad thing?
well, as it starts increasing, I still have that $1 million loan, but I'm getting paid less and less Bitcoins for the same service.
But Bitcoin's worth.
No, but your Bitcoin's worth more. The Bitcoin that you already own
No,
is
but I
worth
Maybe
still,
he's a debtor,
so
not
my debt was $1 million to start with.
Yeah.
And maybe I was able to originally sell my service for $3,
Yeah.
or three Bitcoins for the service. But as the value of Bitcoins go up, I can only maybe sell it for 1 Bitcoin, but I still have that $1 million debt.
You have to
But
divide.
there's-
So inflation and deflation affects lenders versus borrowers differently, right?
Well,
Inflation
absolutely.
is borrower friendly.
I just gotta think through-
cheaper money.
What I'm saying is that
Let's hold off on the question.
So we don't have inflation built into the
There's,
system.
there's price deflation and then there's monetary, there's deflation on goods. And then
Yeah.
there's deflation of the monetary system,
Right.
they're different.
Right.
So go ahead, I think we'll hold off on that.
Yeah,
Well,
so,
I don't know, it's just a point.
no, I do want to talk about
It
it.
confuses
I got to think about it a little bit, but, so essentially my argument is that inflation has to happen. Now, it doesn't have to happen today, it doesn't happen tomorrow, it doesn't have to happen this year. But in the years ahead, it has to happen, and it has to happen on a very large scale unless they're willing to redesign the system. And I don't know any politician that wants to go back to a gold standard because it forces them to be more financially responsible. Exactly. So I say that there's going to be the biggest wealth transfer in history, from paper assets to real assets. Now, I don't think everybody should go out and put all their money in gold. I have almost all my money in gold, but I don't recommend
Where do
that
you
to anybody. I don't have it all at home.
No.
But, you know, whether it's productive real estate, whether it's commodities, precious metals, you know, art, jewelry, you know, certain equities will do very well in a highly inflationary environment.
Which ones?
Commodity-based, you know, some kind of agriculturally based, timber-based, something that
Right, so they're
something that
built-
produces real things.
Right on commodity.
Yeah,
Right.
yeah. And as long as that company can pass on, it's good as something that they can pass on their input costs to the consumer, and they will still pay it. Cigarettes, as an example.
Yeah.
Then it could do very well. But if they don't have that pricing ability to pass that on to the consumers, I think their margins are going to get squeezed and they're going to do very poorly. Okay, so what are the solutions? Well, there's a couple of them. Anybody recognize this guy? There's no way you do, but his name's William of Ockham. So he's the total antithesis of Rube Goldberg. Ockham said the simplest explanation that solves the problem is the best solution. And that's where I say a hard or commodity-based monetary system is a partial solution to this. Again, it's not everything, because you still need to limit the ability of the politicians to borrow, because otherwise they'll spend it all and you'll lose your gold to whoever else it is. But the values of a hard money system is that it has an intrinsic value in and of itself. The money has value. Not because the government says it has it, it's because the market says it has value. And every free market in history up until now, at one point used gold as money. Everywhere in the world, every culture. So if and when we have
those
to
guys in the Pacific with the big stone rings.
Sure, that was one type of money as well.
The yaps.
I don't think that's necessarily going to transfer into today.
I think tulips are it.
My argument is that the government is either going to have to transition back to a commodity-based currency system willingly, or the market will force them to do it. Now, it doesn't have to be gold. I'm sure gold will be part of it, but it could be oil-based, it could be a combination of oil, copper, you know, whatever,
What do you
nickel.
think the steps are by which the market forces the government to do it? I mean,
The-
I think the most probable
Yeah.
scenario, they're going to print as
When the
long as they
bond-
can, right, until something breaks.
When the bond vigilantes show up at our shores and no longer buy our debt, and they short our debt, that's when it happens, in my opinion.
Yeah, but if there's an incentive among the voters to borrow, because, you know, I'm Joe Q Public, right?
Yep.
You're the government, you're promising me services,
Yep.
right? I want them now.
Sure.
And then instead of taxing, I don't want you to tax me now because you reduce the money in my pocket, but you pay for these services with debt that, you know, I'm gonna be dead. I mean, by the time this comes due, I don't care. So I'd much rather.
It could go on for a very
Give
long
me
time.
stuff,
Right.
pay
And
for
it
it.
can go on for a very, this may not happen next year. It may not happen for 10 years. It may happen 20 years from now. But at some point, people will no longer buy the US Treasury debt.
And so what do you think the steps are? So
So
interest
when is
rates
this
go
gonna
way
happen?
up on the.
But I don't, okay, so I don't
Treasury.
think, yeah, eventually, but I don't think interest rates are gonna go for a very long time. I've kind of changed my mind on this in the last couple of years. 5 years ago, when I first started getting into this, I thought, oh, interest rates are gonna spike, you know, short treasuries. I don't think that anymore. I think that, and the reason is because I now kind of understand how the system works, is the Fed will first, they'll grab the pension plans and they'll make them hold
Yeah,
40%
those confiscate the
treasuries.
401ks. Yeah.
That'll be one step. Another step will be that they will go to the banks and they will say, we are going to auction off $200 billion worth of treasuries today, you're going to buy all of them. And if you don't buy all of them, then we're going to shut you down. And they'll figure out a way to shut them down. So I think they will, and then they'll say, listen, we'll come back 2 days later and buy them back from you. We'll buy them back off your balance sheet. But in the meantime, you've got to buy them. And they will just,
That's printing, right?
absolutely. But
One
until,
level removed, but.
yeah, but I'm saying that I think there's a lot of steps. I think the interest rates are going to stay flat for a very long time and then spike. I don't think there's going to be a do. I think it's going to be a 45-degree angle.
Because, you know, the treasury
Or
market
90
has
angle,
a
sorry.
supply and demand like any other asset, right? But there's additional things, which one is this flight to safety.
Yeah.
People are buying, X% of the people buying treasuries are not buying it because they believe in it, they're buying
Right.
it. There's, everything else is so much crappier.
Right.
The other thing about US treasuries in particular is it's the largest single asset market on earth.
It is.
It's trillions of dollars, and if you're a money manager and you gotta move 100 billion in and out quickly,
Yeah.
you wanna find the
As the
biggest
system is
pool.
currently designed, you're correct.
Right.
But the gold market is the biggest market in the world as well. It's the most liquid market in the world. Nothing's more liquid than gold. All you have to do is change the price. You know, there's not enough gold around at $1,800 an ounce or $1,500 an ounce, but you price it at $18,000, it's got plenty of liquidity. And the spread is thinner.
I had seen some data that said that gold, compared to other asset classes, had the highest standard of deviation in price over the last, I don't know, maybe 20 years.
I don't agree with that. I've seen studies that say differently.
Oh, really?
Now, put the last week into it, that might change.
Well, I know.
But, yeah, I mean, I have it in here somewhere that I can
The
show.
standard of deviation, say gold over a multi-decade period versus
Yeah,
equities.
let me tell you what it is. I have it right here.
Oh, okay.
Have you heard anything about the GATA organization?
Sure, yeah,
And,
absolutely. I know,
and their allegations that the international bankers were
Yep.
kind of moving gold around, leasing it, lending it back and forth to keep the price suppressed.
sure.
Um,
Let me touch on that, because I think
Yeah,
that's very important to talk about.
I think that should be a part of the whole context of what happened.
You're not
last
helping
year
my
and a half or
cynical
whatever.
husband and me.
What's
See
the organization
everything.
you're talking about?
So I actually know,
Gold Antitrust
I actually know the
Association.
whistleblower.
GATA.org, yeah.
That GATA always cites. So
The
there's
one
a
in
guy,
London?
there's a guy
Yeah.
named Andrew Maguire, and he has been trading precious metals for 30 years, and he's very good at it. I've seen his trades. I've watched him do it. He absolutely insists, 100%, that it's manipulated. He knows how they manipulate it, and whether he's right or not, he knows how to trade it. 'Cause I've seen him do it.
But WikiLeaks, the documents.
Yep. So I also know people on the other side, very smart. You guys would all know their names. Been trading this for years and years, and they say it's absolutely ridiculous. There's no way you can keep a secret that big, that long, without somebody talking. And I tend to agree with that because I don't have a very high opinion of government to begin with. And to think that they can't manage a yearly budget, but they can somehow manage this process for 40 years without anybody
But
knowing.
wouldn't this be really the central bankers,
Well,
not the
that's
public,
the
central bankers,
not the
yeah.
elected?
Listen, if it comes out that it is proven, I will not be shocked one bit. The reason I don't get too caught up in it because there's absolutely nothing I can do about it. And whether it's manipulated or not, in the end, the fundamentals will win. And so, a portion of your portfolio, whether it's it's all a probability set. So if you think of what I'm saying as crazy, maybe you think the probability of what I'm saying is 1%. But it's not zero. After all you've seen in the last 5 years, you can't say that it's zero. So maybe it's a 1% probability. Then you need to have 1% of your portfolio in physical gold that you can access. Now, if you happen to think it's a little bit higher like me, then maybe that goes up to 5%, or 10%, or 20%, or whatever is comfortable for you. But we've seen, I mean, they fixed LIBOR, for God's sakes. LIBOR is the cost of money. It affects everybody in the world. If they will manipulate the LIBOR market, what won't they manipulate? All I'm saying was with the whole gold thing, it will not shock me at all if it's proven that it's manipulated. There's no way for me to prove it. And the people who have showed it to the regulators, because the regulators are probably in on it too. If it's manipulated, the regulators have to be in on it. So therefore, how do you force them to regulate something that they're in on? So, I'm not trying to dismiss it. It probably is manipulated. I just don't know how to do anything about it. And if it's manipulated, I'm still going to buy gold. Because I think it's the one thing that
concerns about gold is that, you know, I think the commodity story makes total sense, right? That's
Yeah.
an actual thing that someone's using to do something. Well, my concern about gold is it doesn't have a lot of uses in and of itself.
Sure it does.
It goes into jewelry,
Sure it
but
does.
that's
But
not a
that's
big
what
one,
makes it
right?
such a good money.
You know, silver is used a lot in industrial.
But that's a problem for money. Because you don't want your money fluctuating wildly during a recession or a
You don't want
depression.
it consumed.
Mhm.
want
You want it
store
to be stable.
Yeah.
Because gold is not used in industry, that makes it even better.
It's a store value.
Store value.
It's used in industry.
Let me show you something.
Yeah, but not as much as silver.
There's another reason why silver. Well, there's another reason why gold is better than silver. So this is a silver coin.